let's get to the next leg of our conversation. We're joined by Ashish Gupta, Chief Investment Officer at Axis AMC. Ashish, very good morning to you and great to speak with you.
Good morning, Taman.
It's an unenviable position for anyone who has to take investment calls on large sums of money right now. So just with that, I understand how this must be for you right now, because we have the relatively easier question to ask the relatively easier job to ask the question. So let me start by doing that. How really do you navigate this time when you're looking at where to invest?
Taman, I think it's very important at times like these to keep a long-term perspective and not react to every news flow that is going to come through. As material as announcements yesterday were on the Trump tariffs, we have to recognize that this is only the Act One, right? There is going to be multiple cascading impacts of this, and even if we assume that there is no pullback in these tariffs, which of course is a very, very big assumption. So most likely there will be some changes to these announcements in the coming days. There will be bilateral treaties that will be drawn. So it is very early to make conclusive decisions based on this information. But even leaving that aside, there is going to be second and third order impacts of this that will be in the realm of not just economics, but in geopolitics. Countries will look to realign themselves. There will be impact not just on equity markets. I think currency market impacts is probably the biggest area to watch out for, because historically, if there are big changes to trade patterns, there is big changes on the currency side, and we have not seen any of that yet. So I think the only thing we can be certain is that markets will be very choppy over the coming months. It is going to be a high period of uncertainty. I don't think the right strategy to follow at this point of time is going to be just pick out winners or losers from any announcement that is going to come in. So you have to really have a very balanced, diversified portfolios in times like these, and try to manage the volatility through that.
Okay. Ashish, good morning, Neeraj here. I'm just trying to understand, either swapping the portfolio for themes or putting in new money to work, is it getting skewed towards, let's say, the domestic predictable plays versus the global cyclicals, whereas the global cyclicals like IT, for example, down 25% since the December peak. So in some sense, there has been a serious value erosion there.
No, certainly. But unfortunately, even the domestic plays are not going to be completely immune to it, right? You look at the IT sector pullback, but you look at the pullback in the real estate sector in India, right? It's a completely domestic play, but it has pulled back because there's a concern on what's going to be the wealth effect in India because of what's happening in the financial market. So I think the correlations are going to run deep. And many of the correlations are going to break the patterns that have historically followed. So even if you look overnight, so typically when there is a risk-off trade globally, there's a flight to safety, you see the dollar strengthening. Right, people take dollar trade as a safe haven trade, but if you see the dollar index is down below 102 now. So I think we have to be very careful of trying to have a very skewed portfolio in times like these. I think top-down theme-based investing is going to be difficult. I think theme-based investing worked in the last 3-4 years, But in the coming 12 months, I don't think it will be theme-based top-down investing that will work.
Got it. Okay. Ashish, okay, you don't do top-down, you do bottom-up. Still, I'm just trying to understand. And a pertinent point,
Yes.
right? I mean,
Yes.
you kind of ignore real estate. Maybe some people can ignore real estate, but the price deduction is there. Where
Yes.
within this price, when the prices have gotten pummeled, do you see opportunity with of course, I mean, a hypothesis that you may have around it, that maybe the wealth effect doesn't get impacted too much. Even the capital
Sure.
marketplace, some of them have come back, right?
Yes.
So where is it that you find some conviction?
So again, to be honest, we have actually also suffered because we were positioned in some of the funds. We were overweight real estate, and it has hurt us as well. But we actually are optimistic that the medium to long term outlook of the sector is good. There's been huge consolidation in the sector since 2018. But my point was that it does not absolve us of the pain that will be. So it's not that the purely domestic place will necessarily be immune to the pain that will be there. It's just that it is in names like these, we have the conviction to hold them through this period of volatility, right? I think if we look at other segments of the market, financials is clearly one area where the balance sheets are very, very healthy. Some of the concerns that were coming on the retail asset quality have also started receding, and the regulatory outlook has improved significantly, both in terms of the kind of sanctions that were being put on various lenders, as well as the aggressive liquidity infusion that has happened. So that is one space we like. We are selectively looking at some of the consumption names. Power is a sector we like. I think both the energy transition as well as really the demand supply dynamics mean that this sector will have favorable tailwinds.
Got it. Okay. Well, I'm guessing it's a difficult set of questions per se at this point of time, considering that there are no clear answers. But Ashish, thank you for being candid enough on a lot of things, and wish all of us all the best in navigating through the next few weeks.
Thank you so much.
The pleasure was ours. Well,